Hello, folks. Brandon Chapman with you today. It's another Thursday night video for, I was going to say March, but it's April 4th, 2022. Boy, we've passed April Fools, but it was no April Fool's joke, which came out over the weekend as Elon Musk, CEO of Tesla Motors, announced a 9.2% stake in Twitter. And that comes alongside, Jack Dorsey lamenting the centralization of the internet. I mean, my goodness, the guy's profited so much off it. I mean, is he really legit? Probably not. But, certainly Musk wanting a social media platform is certainly something that may be apparent by his announcement today, taking a rather large stake in Twitter and maybe changing a little bit. We'll see. I'm not sure how freedom-oriented he is in terms of allowing the liberalization, but he certainly complained about certain things. So hopefully maybe it leads to more of an opening up of Twitter in terms of policy. And of course, you look at Twitter today, it was the story for the most part of 27% on the news. And for the most part, I think it encouraged the market, generally speaking, to see that, hey, somebody's taking a big stake in a stock that's beaten down. And if you look at, for example, the Spider Select Sectors, what you'll see is that, as you look at the top performer, it was communications and cyclicals and technology topping that list. And so, again, what you saw is kind of that bullish bias coming into today. And it seemed like Friday that some of the some traders are kind of sitting back. Maybe even you saw some large unusual option activity trades were kind of pointing to the downside. And now all of a sudden, are we reinvigorated by this announcement? It doesn't materially change things, but on the margin, could we push back to the high from last week? Yes. Could we even retest 480? I think it's a possibility, although maybe a long shot. What's more important is not the level the market's going to go to, but rather the risk you have to take to get there. So, for example, we look at the VIX today. The VIX pushed down to about 18.5. We're below the 20 level. Is there room to the downside? Sure. 16.5 down to about 15 to the downside might be a possibility. But when you look at the 3-month VIX and you look at the structure of the VIX market, you'll see we ticked up today, meaning what? 1.24. The 3-month VIX is 24% higher than the VIX. When you get to this point, you have to realize the market is expecting higher volatility in the near future. I'm talking about the next few weeks. Generally speaking, when you get this kind of scenario, you're generally looking at a 5 to 10% pullback in the market in the coming weeks. You complement that with what's going on in the SKEW index, SKEW. The SKEW represents what? The degree of hedging that's going on. You'll notice this print from last Friday. It hasn't been updated for today yet. It's an end-of-day data point, but we popped up to about 145. We've been on a pretty steady uptrend since mid-February, and as you start to look at the expectations regarding the Federal Reserve, you start to understand the risk right now is potentially to the downside. And when you go back to and you look at the S&P 500, let's take SPY, you start to realize, okay, yeah, maybe we got 480. What do you have to risk to get there? 410, 350? There's a lot of potential downside here. And I'm going to show you an HYG, unusual option activity trade, that really reflects that type of sentiment. Now, as we circle back to commodities /CL, oil was up about 4.3% today. That's a huge number, but there's just so much volatility going on right now. When you look at the product depth and you consider the term structure of oil futures, what you're seeing is we are in backwardation. The backwardation is eroding, and you'll see it compared to the last couple of weeks here. And what this is emblematic of is certainly the backwardation represents an implied shortage in the oil market. It's there. It's not going away, but it is flattening, right? It is diminishing to some degree. The difference in the price of contracts between the April and May has flattened a little bit compared to where we were a couple of weeks ago. And the blue line represents where we were on March 11th. So it has flattened out a little bit. Yeah, last week's inventory data certainly pointed to the potential we might see demand destruction. So we'll see. But again, remember, the risk by virtue of this downward slanting term structure tells you the risk in oil is still to the upside. And that has not gone away as we're dealing with very, very low supplies generally. And it's going to be very, very difficult for oil prices to come down substantially. So meaning what? As opposed to the market, oil may have 130. Is it possible we might get a 200? Well, the downside might be around 95, 90. So limited downside, lots of potential upside. However, with a lot of energy companies, you look at XLE today, did finish in the green, kind of flirting with maybe breaking out in the coming days. So while I'm saying don't take your eye off energy, and generally speaking, commodities in general, right? Agricultural commodities, as we've talked about, ADM, Intrepid Potash, CF Industries, FMC. These stocks have done phenomenally well. They may catch a bounce here. So again, just don't take your eye off them. There may be opportunities. However, today, just didn't see a lot of unusual option activity in these names specifically. What you saw, and this is something I profiled about a week and a half ago in my Friday top-down session. I spent more time on it last week on Tuesday during my session on TheoTrade that I do daily. And I created a couple of watch lists, 5% and 20%. One thing you're seeing right now is there's combination of high short interest. Now, what would high short interest be? For companies that have high floats, let's say, a couple $100 million plus, if you got about 5% of the float, which is the shares outstanding minus restricted shares, if you got about 5% of that float on about 5 days with a short ratio of 5 days, you're talking about impactful combination. As you get to smaller floats, you probably want to look north of 20%. And some of these are kind of on the cusp here, like a Jumia, for example, or an ATER, for example. These are higher short interest companies that don't have huge floats. What you'll see is that ATER today was up 46%. You'll see the last time we saw this kind of move in ATER was when? Back here, but it faded by the end of the day. We caught a nice bid here. It lasted for a day or two and melted. But the last time we saw any sort of sustained rally was back in August. Now, again, you figure 1 out of 3 chance to maybe going up. A fairly significant amount. Even back here, for example, went from 16 to a high of 21. This went from about $6 up to 20. You think about maybe 50% of the time in the recent past when you've got a setup like this, it's moved substantially, maybe $15, $20. Again, that's why you're seeing 46%. It's a lot, but it's not. The stock has very, very high short interest, a very low float, maybe around 26 million shares. And today, what you saw in ATER, and if we, I say ATER, but ATER, Atarian Incorporated, what you saw in ATER, it was an April expiration. So we're out there a little bit. Out at the 5 strike, 17,000 contracts traded. Again, mostly bought. Does show there is potential for more upside here. But remember, this is a very volatile company. We could see this drop 50% tomorrow or 80% tomorrow, right? So you got to risk, plan on risking whatever you put in it, but there could be significant upside, or take the options route, right? You don't have to buy the out of the money call and let all risk. What if you were to buy a 4 and sell a 5? Cost you, less than 20 cents for $1 of upside, 80 cents potential upside, 20 cents of risk for 10 days, or come out here to May. Give yourself a little bit of time. Again, you have upside, the skews going favorably, 5, 7.5, costs you, again, less than 20 cents for a 250 spread, but angling for even more upside to 750, which is up here, which is similar to we saw back there. So when you think about this combination of unusual option activity and high short interest, this is something you can scan for. I'm scanning all stocks, but I could scan a watch list using these types of criteria and be able to find these kinds of companies. And we got ICWI again, like, Jumia, for example, technologies today, really nicely breaking out of a couple month consolidation. Jumia, a weekly option here, 8 April 11. These can kind of fade a little bit. It's already moved in the money. But again, when you look at these companies right off the bat in the morning, you see this kind of movement. NNOX, for example, this is NanoX Imaging. So with NanoX Imaging, this is one that we saw last Thursday, that I called out last Thursday, right there, held, and then today up about 12%. So fuel cell today, in fact, a 9% move in fuel cell. Fuel cell was a weekly expiration at the 7 strike. Can we see a further squeeze to the upside in these names? Yeah, they might be just intraday. Sometimes they might go for a couple of days, but these are things you can pick up early in the day before they start to move. NEO is up another 8% today. This is one we saw highlighted a couple weeks ago in terms of unusual option activity. Open again up another 7% today. Last Friday I saw some bullish activity in Open. Today GPS, we're scraping the bottom of the barrel here on GPS, right? But we're at a key level of support. We saw a nice bounce today, 5%. You got resistance around 1550, nearly 10% higher than the current share price. And today, what you saw on GPS, for example, was an 8 April 14th. Again, a weekly expiration. That 14's now moved in the money. We've kind of hit that target. But watch in the coming days for further weekly activity, fueling these companies and seeing these stocks move higher. Because again, you're seeing it on a day-to-day basis. This stuff is moving. Another one is Plug. So Plug is one we saw. I highlighted last Thursday that had significant option activity. It was for a 30 strike. We're finally catching that bid today, squeezing to the upside, nearly 12% higher. Another one here, COOP, COOP. Now, this one is not one that has necessarily extraordinary short interest. We're in a bit of a downtrend. Does look like it's kind of a falling wedge type formation. As we're narrowing in here as this stock falls, we saw a little bit of a bite, not a lot of volume. But one to watch the coming days. Do we start to break higher? This is a July expiration. It's out there a little bit. It's an upside call spread, 50-55. A bit of a ratio there, basically 20,000 and 10,000 contracts. But again, looking for upside in COOP to north of 55 by the summer. You might look for that breakout to occur, but this one gives you a little bit of a heads up before it actually potentially occurs and begins to move higher. But again, there's a lot of these names on this list. Again, these are greater than 5%. There's also one that's greater than 20%. Again, these are focusing on really low flow stock, but really significant short interest. You'll see Romeo Power was up substantially. Again, Fisker Auto. Now, Fisker today was the June expiration. So we broke out. But again, this is where we're starting to see, are there cracks starting to form, right? We may see a continued fueling of these rallies. But today, what you did see was the opposite. Here's a company that has very, very high short interest. It's been squeezed higher. It was up nicely today, up 11%. But what you did see, and this is going out a little bit further in time, 22,000 contracts at the 1250 put, mostly bought, angling for the downside. So remember, this is a very tenuous perch that we're sitting on, right? Resting on. Yeah, we got another push in a lot of these companies after taking a breather on Friday. Certainly the news that came from Elon Musk help these stocks continue to see that squeeze. Maybe we can squeeze out a little bit more. But remember, the higher we get, the more risk we have in the downside because of the general conditions as a result of what we're seeing in terms of bond yields right now, which moves slightly higher today, yield curve inversion, the shifting, more hawkish expectations from the Federal Reserve. But right now, as you look at GLD, the dollar's not feeling a lot of the strength that's going to put a lot of pressure on on the market more broadly. So we're kind of in a little air gap where the Federal Reserve has not raised 50 basis points. We don't know what the policy is. We know that they're probably going to engage in quantitative tightening. We don't know when that's going to be. There's a lot of bearishness here in the near future. But are we reaching an air pocket here just before earnings? We're seeing a little bit of levitation. Again, we're a couple trading days into the new quarter. Again, I'm not sure that necessarily provides a lot of bullish sentiment. Again, on Friday, I think today the news coming from us certainly may have helped propel things a little bit and getting them on track for maybe a little more of a squeeze in the coming days, maybe for this week. So again, watch for the opportunity in the high short interest names. Certainly look for it spilling over more broadly into technology. But remember, this is a clock that's ticking. And again, I think today's trade in Fisker is certainly representative of that ticking clock that's going on. Anyway, it's a pleasure being with you today. We'll catch you back next week on the Theo Night video.